Tumi, thank you so much. It's a pleasure to have you on the show.
Thank you for having me.
Before we go into this new 5-year contract, 4 years ago, the CBN did introduce the Naira settled OTC FX futures. Could you just give us that backstory? Let's lay some precedent. Let's start from there.
Okay, so the market at the time, the FX market, had a few challenges for the period, and it became apparent that we needed a hedge product because obviously those who had invested in FX, maybe prior, saw, their investments, if you will, or whatever it is they had put their FX into, pretty much taking a bad turn, if you will, with rates moving from 200 Naira to, we know what happened at the time. So to pretty much try to stabilize that market and bring, more sort of comfort into the market, the hedging product was established, and that's the Naira settled OTC FX futures. Now, the product itself was unique in that it's Naira settled because usually the non-derivable forwards would have been settled in the currency in which you sort of trade invest in. So that was that at the time, again, to bring sanity to the markets, prevent people from hoarding the dollars, and essentially helping people to be able to plan appropriately.
So now 4 years later, what is that? What does the picture look like, and what kind of volumes have we seen at the market since then?
Okay, so as you would obviously have seen, the FX market is obviously more stabilized, and what is happening in the market is, a willing seller would get dollars at the rate at which they agree. The futures product has increased considerably from when it started to where we are today. So we have about maybe 36 billion worth of contracts that have been traded in and settled about 26 billion. And what we have outstanding is about 10 billion. And we've seen consistent growth over the years since inception.
Now, for this new introduction, 60 monthly contracts by the CBN, what is the rationale for this? And I'm just wondering in what way specifically would this benefit the market? Okay,
so a reason for having a hedge, let me use an example of I bring in dollars into the country and I want to, say, invest in maybe the bond market, for instance. Now, we know bonds are over a year and typically 3 years and above, and we have obviously much longer tenured bonds. What happens is I can bring in dollars if I invest in a 3-year bond. In 3 years' time, the value of my dollars, the value I brought in will probably be different. And because of, ensuring, you don't know what's going to happen to dollars in 3 years. So this is about ensuring that I at least save my principal. And that's from those who invest. In terms of those who actually need to buy dollars, for instance, you would know what it is you're going to buy your dollars at in, say, 6 months' time. So this was birthed from a requirement from the market, saying it's good we have 12-month contracts. 13th month was introduced last year, again, to address those who required a full 1-year hedge. Now, the thinking was, how about us going extra and going to the 3-year, 5-year, where at least we'll be able to invest in longer tenured securities.
Now, but would the 1 to 60-month contracts still be traded on the FMDQ?
Yes, they will be traded on the FMDQ, and they will continue to be managed, the clearing and settlement of it, by FMDQ Clearing House. That's the FMDQ Clear Limited. In terms of margining, so all the necessary risk management that go with having all these contracts have been put in place. Margin requirements would change because, again, of the length and all of that. So ensuring that there's still that market confidence, and again, confidence in the product that has been operated for almost 4 years now, like you said.
Now for investors who are interested in accessing the Naira settled OTC FX futures contract, how do they gain access?
Well, it remains the same. You have to go through an authorized dealer, which is typically a bank, and they are the counterparty to the trade with the central bank, and they would place the order on behalf of their clients with the central bank.
Okay. But let's quickly talk about the FMDQ's, your derivatives market project. How far, what's the progress so far?
Well, we've been making good progress. For the last year or year and a half, we've been, doing the groundwork. We had a feasibility study in 2016, and obviously the need for hedging products in the market was established and validated, if you will. And we've started market engagements, different classes, education, awareness, and that. And we're in the stage where we're trying to put relevant rules in place, the market systems, again, continuous engagement with regulators and those who are going to play in the market. And we're looking, and hopefully to at least launch the first one, and hopefully launch, well, the second one, if you will, hopefully launch 2 more products this year.
Because at the heart of it, obviously, is the products. But I'm just wondering, in terms of number, how fast and how? Is there a number in terms of the products that will come out that investors can look forward to?
So we're looking for an additional 2 this year, but that is what we're hoping to do.
Okay.
But of course, this would depend on market dynamics and how.
But what
in terms of what we're putting in place is to launch at least 1 before, maybe by half year, and then another one before the year runs out.
Okay, Tumi, I must thank you for your time. Thank you so much for sharing that with us today on the show.